Hi, everyone, and welcome to the Savvy Ladies Wednesday Wisdom webinar. I'm Maggie Montemuro, and I'm the Marketing Manager at Savvy Ladies. This is a quick reminder that if you have any questions during the webinar, you can type them into the chat box or email info@savvyladies.org. Today's presenter is Carrie Rattle, founder and CEO of Behavioral Sense. Carrie's passion is helping smart women professionals and entrepreneurs build money confidence by getting control of their cash and changing behaviors that subconsciously sabotage those efforts. As a North American money behavior specialist, Carrie's behavioral experience spans both individuals and business clients. Carrie is a veteran executive from financial services with banking, credit card, and brokerage experience in multiple countries. Thanks for joining us today, Carrie, and I'll hand it over to you.
Thank you, Maggie. Welcome, all you savvy ladies. I know some of you may be in small businesses now, or you may be looking forward to setting up your own biz, and congratulations to all of you. I actually worked in Fortune 100 companies, but also small businesses, one of 300 people, which isn't quite so small, but also one of 40 people. And I now have my own business as well. So I'm excited to be speaking with you today. We're going to cover 7 money behaviors that any small business owner should either try to avoid entirely or try to manage as much as possible. So if you go to Forbes or Bloomberg or any other really reputable publication, they always have a list of the top 10 reasons that a business fails. And of course, that's not going to be your business or my business, but it's good to know the top reasons so we can avoid them. And 2 are so typical. They're almost in every single list. Not having enough of a cash cushion to start a business. And, really it takes about 3 years to truly get good traction in a business. So that's a lot of expense along the way. And secondarily, poor accounting or poor cash management, which is managing your inflow of revenue and your outflow of expenses in such a way that you don't run out of money as you go along toward profitability. So I'm going to start with our first money behavior that we want to try to avoid. And it's a pretty basic one, but I would be negligent if I didn't mention it. And it's called thinking small. You want to plan to be so successful that the world is going to hear about you. Think about it. Why not? So to do that, you need to protect yourself in some of the basics, right? So I'm sure most of you have thought of registering your company name and copywriting your material so that nobody can steal it, that it's yours because you work hard to actually build and deliver that material. You also want to ensure that you talk to an accountant about tax implications, such as where do you want to domicile your business if you're going to be across the country? Do you create an LLC or an S corporation? It's really good to figure that out early in the stages. And you know what? It may be a half an hour or an hour with a tax accountant to have a discussion like that. So it's not like you have to have a tax accountant on board full time. And of course, protecting yourself by owning your business name and your own name across web URLs, Twitter, etc. So let's talk about the second money behavior. Being penny wise and pound foolish. This is such an old term, but it still rings true today. And really what it's talking about is being a short-term thinker. And being penny wise means really good at saving. Pound foolish means skimping on investments today in your company that could dramatically affect your company later if you don't take care of them. So I mentioned before, it takes a good 3 years to get solid traction in your business. And we all have to manage cash flow. So there's always a bit of skimping and saving along the way. But here, I'm actually telling you sometimes you need to spend money, which sounds contrary, but I'll give you an example. I was at a legal seminar the other day. A young woman put up her hand and said, you know what? I can't afford a lawyer to cover my patent. I need to do it myself. Now, if you think about the worst scenario of not properly registering a patent, the worst scenario is that someone could copy it, steal it. And if this is what your business is all about, if this is what you truly offer that makes you special, if you don't register it properly today, you could have someone come along 3 years from now, create the very same product. They may have more marketing budget than you and blow you out of the water. So that would be penny wise by not hiring a lawyer today, and pound foolish. So that's something you always want to keep in the back of your mind and just look at, what do I spend today versus if I don't spend on that, how much is it going to cost me down the road? And if it's big and it's threatening and it's a risk to your business, don't be penny wise, spend the money. Number 3, not knowing your own money behaviors is a money behavior you want to avoid. So here's how it goes. You develop your money beliefs when you're about 5 to early teens. And you probably aren't even sure what some of your money beliefs are, frankly, because it's part of you. It's in your subconscious. Your money beliefs drive your money behaviors, and they develop money triggers for you. So if you're having a bad day and you need to go spend, it's this urge you get. Or if you've got a lot of money flowing out the door, you may get this urge to cramp down and save because you're reacting to something in your money beliefs. So I'm going to talk about a couple of scenarios here: a saver, a spender, and somebody who's maybe just a little sloppy with their money and how it can affect your business. So I am a saver, and you'd think that would be a really good thing. Only I'm the kind of saver who likes to park it in my account, and then I like to sit there and watch it grow. It's like sitting on my nest. When I have to let money flow through my fingers, it doesn't make me a particularly happy person. So when you think about that, I've got a business. I have to invest. I have to spend money on marketing, on PR, on employees. And so the way I counteract my own money beliefs and my own sort of frugal nature is that I have 4 advisors who advise me on my business. 2 are very senior women in the women financial services space, because that's the space I'm in. 1 is my investment advisor who manages my savings for me. And the other one is my husband, who has some money beliefs that I do, but also has different money beliefs. And they have permission to tell me and kick me in the butt when I'm not spending enough money on my business. And so that's how I counter my money beliefs and behaviors. If you're somebody who's a little bit sloppy about your money, or you're so time crunched, it's just not top of mind for you. If you make payments late, it's going to really affect your personal credit score. And as a small business owner, landlords, vendors who are going to sell goods to you, they're going to look at your personal credit score. So if it's not as strong as can be, they may charge you extra. They may ask you to pay up front for goods that you're about to sell, which will really hurt your cash flow. If you're a spender and you like nice things, or you don't really keep track of your money, here's something to think about. Do you really need the state-of-art computer to get your business going, or what you have is good enough? Do you really need a nice desk? Sure, you're going to be CEO or founder or principal, and yes, you're going to be working really hard. But if you can afford secondhand furniture, now's the time to think about that. I'll give you a really good example. In the company of 40 people I worked in, the CEO had built and sold 2 other businesses. And he walked around with these slightly scuffed brown shoes all the time. It didn't matter what suit he was wearing or if he was wearing blue jeans. They may have been his lucky shoes, I'm not sure. But when it came time to be really impressive and to fund the company, he raised millions of dollars, millions from venture caps. So spending on things that perhaps are nice to look at or nice to enjoy should probably go on the back burner until you realize your company is super, super healthy with a good flow. Okay, number 4, co-mingling your cash. Oh, this one happens a lot. So I've got a little bowl of peas in the top right-hand corner there. Co-mingling sort of reminds me of the type of child you encounter who has to have their peas separate from everything else on their plate. Their foods can't touch each other, right? You always run into somebody's child like that, and you have to chuckle because you know it ends up in your tummy anyway, all mushed together. But here I'm saying, don't let your peas touch your carrots. So keep your business revenue and expenses separate from your personal. I know you're probably going to get paid in cash by some client along the way. You may drop it in your personal account because you needed to put some money in there anyway. Here's what happens. It starts to become a subconscious habit. You can't track your total revenue into your business. You can't track all of your actual expenses because they're in and out of different accounts. So picture this. Tax season is hard enough as it is. It's always stressful. And now you've got to rebuild all your revenue and expenses because you have money flowing in and out of 2 accounts. It's an absolute nightmare. Plus, you need to protect yourself. If you're putting equity into the business, so if you're putting expenses on your personal credit card, that's putting equity into your business, right? You want to be able to show directly what's going from you into your business. It's like having breadcrumbs. You need an audit trail to show how much equity you've put in the business. And when you take cash out in the form of a draw or a salary, you want to show that specifically because lenders in particular look for that. They want to see that you're actually taking a reasonable salary out of the company and that your company is profitable. Number 5, oh gosh, taxes. So taxes are one of the main reasons businesses fail. And this is not going to be you because I know you're going to follow through on what you should do here. Make your tax account sacred. So we're talking about 2 types of taxes here. First of all, there's sales tax. If you collect sales tax on your items that you sell, you are an agent of the government. This is not your money. You're collecting it and you have to remit it to them. Lots of small businesses use it in their cash flow. They use it to pay expenses, but then when it's due, they don't have the money. So when you collect the sales tax, put it into a separate account. And the other form of taxes is, of course, paying taxes on your profit because you are all going to be profitable if you aren't already. You're going to work hard and you're going to do really well. So here's the first thing I would suggest you do. If you think you're getting close to profitability, at the beginning of the year, sit down with a bookkeeper or an accountant and sort of guess as to what your net profit's going to be. It's not going to be perfect. Don't worry about it. Just get it directionally correct. You can estimate what your taxes might be at the end of the year. Start putting a little bit of that aside each month. And I know cash flow is tight. I get it. But here's what happens. I've seen this thousands of times. If you think of your personal life, somebody will say, oh, yeah, I need to save, but I can't this month. I have too many expenses. And then they get to the next month and they say, I'm just too exhausted. I can't focus on this. Yes, I need to put money aside, but I'll get to it. And after 10 or 11 months, they still don't save. The same thing happens in trying to save money for taxes. If you end up with a whopping tax bill when it's tax time and you don't have any cash to pay for it, then your business is suddenly in trouble. It's a difference between hope, which is, gee, I hope my tax bill's not going to be too high, but let me kind of plan for a fair amount of it as I go along through the year, versus wishful thinking, which is sort of saying, okay, I'm hoping something magic happens or I get a big sale because I have no money in the bank to cover my taxes. Number 6. This one I never would have guessed until I had experienced it with other women entrepreneurs. You don't understand how capable you are. We women are kind of underconfident a lot of the time when it comes to money, when it comes to setting up our businesses. So we're always searching for learning. We're always searching for something to make ourselves better, when in fact, quite often, we're pretty good just as we are. I've gone to a lot of networking events and I've heard about a lot of programs where you can park quite a chunk of money down and wow, that's a lot of your business cash flow, right? Right then and there. So yes, it's important to invest in yourself, but be ruthless about it. What do you need today? And just to give you an idea, if you're a small service business and nobody knows about you, you probably want to focus on marketing first, right? You don't have to worry so much about operations because it's just you. You don't have a staff, and you don't necessarily have to worry about closing the leads, which is part of the sales process, because you don't even have leads in the door. So if you have to manage your cash flow bit by bit, look at what do you really need just today and invest in that. It's the inverse of that would be if you're creating a product and you might want to worry about operations first, because if your product isn't great quality, then you're not going to get traction in marketing or sales. So that's number 6. Don't underestimate your abilities. A lot of you are so very capable. Know what you're good at, and then seek very specific tools that you can invest in along the way to help you build the gaps that you have. And number 7, the last one, worrying about cash after you've hit the wall. So you're rolling along and the wave hits the coast, bam. So the idea is that running out of money should never be a surprise. You should be able to think about 3 to 6 months ahead when you might run out of cash. And this is where we start to talk about cash projections. And I know, people's eyes glaze over, but don't worry. And I want to assure you that it's not as complicated as it sounds. And my second bullet point on this slide, I can tell you right now, the best CEO in the world can't project properly, nor can the CFO. They can put all sorts of fancy numbers down on a page. Here's what I think my revenue is going to be. Here's what we think our expenses are going to be. And then you know what? Life happens. So nobody is particularly expert at this. So the trick is to try to project when your cash flow is going to get really tight. Sit down with your bookkeeper or sit down with yourself and just put some numbers on the page for each month. How many leads do you have? Then just assume, gosh, out of my 10 leads I have right now, let's say 3 of them turn into clients. And when do you think those clients will start paying you or buy from you, whatever it is? And then put your expenses in. You'll be able to see with some idea of clarity when you're going to run into a cash crunch. And don't forget about what we refer to is periodic expenses. Periodic expenses are things that don't happen every month. In your real life, it might be renewing your license. It might be paying your taxes twice a year. In a company, it will vary as well. It might be legal expenses you've got for renewing some sort of patent protection or renewing a license or something. So if you can project, here's what starts to happen. It almost becomes magical. You end up with a roadmap. You end up sort of seeing, okay, wow, 5 months from now, life is going to be really tight. So what can I do today? What can I not invest in today that won't hurt my business too much so that I've got a little bit more cash later? It helps you just look at the lay of the land, and instead of rolling around in your head and getting anxious and poking and prodding yourself and figuring out how you're going to solve this, you can look at, here are all my expenses, which ones can I get creative about? Second of all, it's good to have cash projections, because if you do need to borrow, some of the lenders will want to see this. And in some instances, raising cash, it could be an angel investor you want to go to. It could be, a lender like an alternative online lender. It could be crowdfunding. Some of these things take time. So realizing, oh my gosh, next month I run out of cash is a little bit late. So if you can, and I know people's eyes glaze over, but once you start, this is so empowering. You have so much control over your money, and you see where your business is going. It's really, really helpful. So do worry about your cash long before it may run out. So that's it. I thank you for joining me today. I'd love to open it up to questions. If by chance you want to talk about cash flow, or want to start saving to start a business, or want to manage your expenses a little bit better, do feel free to call me. I love speaking with people. I also do offer a 5-hour intensive, which gets you started on a whole plan for your business or for your personal life. Because if you're drawing from your business and you're drawing so much, maybe you can tighten that just a bit without deprivation. I do not believe in deprivation in anyone's spending plan, but sometimes it's just managing our habits a little bit differently. So do feel free to visit me, join my website. And if you want to know your money behaviors, go to the tab on my website, My Money Behaviors. It's a 12-minute questionnaire, and you can get a pretty robust profile that will get you started. So with that, I'd love to hear from you. And if you have any questions, let's open the gates.
Thank you, Carrie. We did have some questions come in, and just a reminder, you can type your question into the chat box or email info@savvyladies.org. And the first question is, what if I can't afford to legally register my company, copyright my material, or buy a website as I'm getting started? Should I wait to start my business until I can afford it, or get started and do everything once there's money coming in?
Good question. Really good question. So legally registering your company and things like that are basics. You want to ensure you have a little bit of a cash cushion, because you might think that revenue is going to come in the first month or two. It almost always takes longer than you think it will. And sometimes you just have to wait for the stars to align, because you can't push things. So please do, yes, look at more of a cushion before you start. If you can't afford the basics, what you're going to find is as you grow, you're going to have to afford more and more things to help you go to the next level. You're going to need a cash cushion.
Okay, thank you. And the next question is, I've never had one accountant prepare my personal taxes. I just use different tax prep companies. If I want to do the same for my business, would this be a big mistake? I really don't know anything about taxes.
Okay, so join the club, right? Like, how many of us really understand taxes at the end of the day? Um, I know it's different for personal, but when you get into businesses, there are so many opportunities where you can take advantage of write-offs or certain expenses. And if you don't know what those are, it's really, really valuable just to get a proper um, tax accountant for yourself. Even let's say your business is growing somewhat slowly and a lot doesn't change over the first 2 years. Even if you get a tax accountant the first year and they can teach you what to watch out for, they can teach you how to look at your business. Um, I so highly recommend just even for the first year to help you learn. And then, my goodness, if your business takes off, and hey, let's cross our fingers, it might, right? It's amazing. Tax accountants are there for a reason. They're experts and they know a lot more than we do as business people. And frankly, you want to keep your eye on the prize, which is growing your business. So I would highly, highly recommend a tax accountant for your business just to discuss the first year, at least.
Okay, great. Thanks. And the next question we had come in is, I know I can't afford to work with a large company for my financial needs like bookkeeping and tax help. I've had friends warn me about hiring an affordable solo practitioner because if something happens to him or her, I'll be in trouble. What are your thoughts on using solo practitioners or even virtual or robo advisors?
Oh, so are we talking about investment advice here?
Um, I'm not too sure, but I would say yes, and bookkeeping help as well.
Okay, so let me split that into two parts. I and I do not give investment advice. I have run my own investment portfolio. I have worked in the brokerage business, but I have my own investment advisor. And robo advisors, from what I understand, there are some good choices out there, and basically they pool your money. So if you don't have a lot to put in and you want someone to grow it for you, which is very smart, by the way, because if it sits in your account in cash, as inflation increases, the value of what you can spend with that money decreases. So it's good. I recommend that, we all put our money into the market if we can, with caveats that you have to understand where you should be invested. So robo advisors have a place in life, but I'll tell you something else too. A lot of investment advisors out there, they pretend that they only take a client with $500,000 to invest, right? Well, if you look at the number of advisors out there who say that and the number of people who actually have $500,000, there wouldn't be enough people to satisfy all those investors who say, I only take clients with $500,000. So there are a lot of investors who take far less than that. And as a matter of fact, if you want to know who my investment advisor is, feel free to email me and I'd be happy just to give you his name. You can check out his website. And by the way, he and his partner are solo practitioners. So that gets into the second part of the question. You know, there is a great place for solo practitioners. And if you hire somebody as a bookkeeper is not difficult to replace. So if they move out of state and you decide that, gosh, you'd rather have somebody you can go visit in person, transferring your files is not difficult. It's the same with an accountant. Because everything is put in place in records and they can review your tax submission, a solo practitioner is not a bad thing. And here's the good side, right? The good side is that they probably don't have a huge firm that they have to pay rent on the premises for. They don't have to pay a lot of overhead, and they may work out of their home. There are lots of really reliable people who work out of their homes these days. So, you know, and that's a money belief, by the way. You assume if somebody is less expensive, they're less good. That's a money myth, especially these days with lots of boomers retiring who've been doing stuff like this for 30 years. A lot of them are opening their small businesses. So I would say just shop wisely, interview 3 or 4 of whatever you're trying to use. And, if you don't trust your own money behaviors, get somebody else to sit in on the interviews too, who thinks differently than you do. And I'm sure you're going to find a winner. I hope that helps.
Great, thank you. And I think this is the last question we have. I'm worried that outsourcing some of my business will mean I'm losing control or not be aware of what's going on. How can I trust that I'll still be managing everything and not be losing track of my business?
Good question. And by the way, that's another money behavior. And I can relate to that one because I like to be able to control things too. So I would start by saying, although I can't see you, I'm pretty sure you only have 2 arms, 2 legs, and 1 head. So if you control everything, your business can only get so big before you drive yourself crazy or implode. So you are going to have to let go. And here's how to figure that out. What is really important in your business? Is it being the salesperson? Is it being the creator? Whatever it is, you keep that. And then look at what else is it that you really don't like to do or that you think you can afford to outsource. And that way, what you can do is you can go in and audit every once in a while. So let's say you outsource to a bookkeeper and the bookkeeper gives you an update every month. Walk into a bookkeeper as a surprise one day, see what their operation is like, see what they're doing. Sit down and say, hey, I need to see my numbers right now. You have the right to audit. If you outsource social media, take a peek every once in a while. Go in and look at your social media platform or go into LinkedIn and Tumblr and whatever else you're on and see what they're saying. Make sure they're doing a good job. So, whatever it is, you're going to need to let something go to let your business grow and just decide what it is based on what's most crucial for your business versus what is a little less crucial. I hope that helps.
Yes. All right. Well, I want to thank you, Carrie, for a really great presentation. And I want to thank everyone who joined us today. We hope you'll be here again in the future. And thank you again so much, Carrie. It was really, really great.
Thank you all, you savvy ladies.
Thank you. Bye bye.
Bye bye.